Good afternoon, everyone, and welcome to today's Payments Association webinar in association with Payall, APP fraud and cross-border payments. My name is Kate McKenzie. I'm Head of Production at the Payments Association. Before we get started, just a few quick things. You can submit questions to today's speakers by typing your questions into the Q&A tab, which is visible at the control panel. You can send in your questions at any time, and the panel will do their best to address them throughout. You can also ask questions anonymously if you do not want your name attached. Please use the Q&A tab rather than the chat function for questions. It's just easier for us to keep track as they come in. If you have any technical issues throughout, feel free to send a message through the chat box to Christina Gatens or myself. I would now like to introduce Dr. Nicola Harding, CEO at We Fight Fraud, who will lead today's panel conversation. Over to you, Nicola.
Thank you so much, Kate. As Kate said, I'm Dr. Nicola Harding. I'm CEO at We Fight Fraud, and my kind of stake in this, I guess, is that it's been a pleasure to be able to research and write the white paper that accompanies this webinar, supported by Payall and obviously for the Payments Association. So part of my contribution today will be kind of highlighting bits of that paper, but I'm actually really delighted to be joined by Gary Palmer, Toby Evans, and Dr. Michael Dwyer, who are going to be giving us some amazing insights into APP fraud and cross-border payments. So rather than me introduce and get the accolades wrong, if I can hand you over first to Toby to introduce yourself, and you can hear direct from him.
Good morning from my end down in Australia. My name's Toby Evans. I head up Economic Crime for Australian Payments Network, which is a similar organisation to the Payments Association down in Australia.
Thank you, Toby.
Thanks,
and Michael, if you could come and say a little bit about what you do and where you're from.
Sure. So hello, I'm Michael Dewar. I'm a VP of Data Science at MasterCard. I work in MasterCard's new product development unit. Spent the last 6 or 7 years building out domestic country scale financial crime products in the UK, and I've spent the last year or so trying to start to think about how we might bring MasterCard's weight to the fight against cross-border economic crime.
Brilliant. Thank you, Michael. And Gary, finally, last but not least.
Hi, everyone. I'm Gary. I'm with a company called Payall, and we are a member of the Payments Association, also the benefactor of the Cross-Border Working Group. Payall is purely a tech company providing software or infrastructure for individual participants in the cross-border ecosystem, from originating institutions to correspondent banks to central banks to domestic networks. And our platform's designed to automate the typically previously manual risk, compliance, and processes, as well as orchestrate payments. But we're delighted to have Dr. Nicola Harding leading and moderating the panel today. I'm speaking on behalf of the Payments Association now, not on behalf of Payall, and really, really enjoyed the thoughtful and fresh white paper you published, Doctor. So thank you very much for doing that.
Thank you, Gary, and thanks for all your support with it. And the same to Toby, because without his insights into the paper, we really couldn't have made it what it is. So if you do get an opportunity to have a read, I do implore you to, because there's lots in there to say, and I think hopefully we can start to touch on some of that today, really, and just give you, I guess, the start of the conversation that the white paper picks up and expands further, but also the start of a really important conversation that's, I think, probably not really being had out there at the moment. So that fits kind of nicely really into my first question for all the panelists to discuss. And as a researcher, I know this is always a bit of a contentious question because no one really has the answer, but this is about your opinion. You know, how big problem is cross-border payments and APP fraud as an issue? You know, how big is it? Is it something the industry is concerned about, should be concerned about, and are we concerned enough? I'd really love to hear your views on this.
I'm happy to kick off. So we've got kind of maybe a couple of views here. So one is, as we are starting to think about how we might help tackle this challenge, we've been talking to a lot of people across the industry to understand the size, of the problem. It's obviously something that people are concerned about. It's no one that we've spoken to is uninterested, although it definitely takes a third seat after domestic account-to-account frauds, especially APP frauds and card fraud. So it's definitely kind of the third priority on the list, which makes it difficult to engage with properly as banks and other FIs are dealing with issues of domestic fraud. So that's also therefore reflected in the liability models that we're coming across. And so the challenge is, especially in the UK, there are very clear liabilities for domestic fraud, although that seems to be a lot less clear both here at home and also elsewhere in the world that we talk to about the liabilities for cross-border fraud. And so that's been a bit of a challenge. The fact that this is a sort of third on the list seems to be reflected in some of the liability challenges. And then quite surprisingly, actually, after having spent quite a lot of time looking at domestic fraud, it's been very hard to find reliable numbers for how big a problem this is, which makes doing things like building business cases really rather challenging, because no one seems to quite understand in detail, in the kind of detail that we need, exactly what the size of the problem is. And so that's something that we are still working on and want to get much deeper into.
And I would add that without repeating what's in the white paper and maybe adding additional thought along what Michael shared, is that I would describe it as an evolving fraud that is also has many dimensions and elements to it, and it will change over time as we see more countries participating in connecting their domestic networks to enable real-time cross-border payments. And it will also evolve as we see the use cases evolving from or growing from bank-to-bank transfers to pay by bank, where transactions are occurring at the point of sale. And so I would, without sort of diving into the great content in the white paper, what Michael said, it's evolving. The use cases are different and dynamic. And it's really important for the industry to be as proactive as possible to prepare for and prevent this fraud from getting out of control. Otherwise, bad things will happen to consumers. And this is what I'm worried about. I'm worried about the fact that customers really want to be able to offer real-time payments globally. It's a big part of the customer psyche and how consumers have evolved. And if we don't get this right, there's a chance that either regulators will overreact in their attempt to do something that's great, or participants in the legitimate banking system will withdraw, which means customer demand will still exist, but there won't be regulated product, and people will migrate over to alternative forms of real-time cross-border payments, which are fraught with even more problems. And there's no opportunity to resolve or reconcile a problem because there's no regulator to protect you, there's no bank to protect you. If you do something through Bitcoin, it's gone. And so I would rather see the industry be as proactive, as engaged early, and try to create mechanisms to deal with this before it gets out of control and before customers migrate to an even worse option where there's not going to be any data on that. It's just going to be a big black hole of badness. And we want to avoid that as much as we can.
Nicola might wrap up and draw out a couple of threads from Michael and Gary. Yeah, I think I'll look at it the Australian perspective, but also what we're seeing globally. And I talk about this erosion of trust across the digital economy. So all these gains we wanted, criminals have exploited and taken those gains away. And we've got to have safety by design at the forefront of what we do for products in the digital economy, or consumers won't use it and won't trust it. So we know there's been that erosion of trust with the telecommunications, where people aren't answering their phone anymore. We know with digital platforms of online advertisements, but we also know it in payments. And when real-time payments were developed domestically, they were exploited by criminals. They can get their money straight away. They can do multiple hops across numerous accounts from digital onboarding, where we had advanced KYC issues. And they've been able to move their money very quickly via multiple off-ramps. And it's not just cryptocurrency. A lot of those are international transfers. So for Australia, one of our members, our major bank, Westpac, published in open source media that 45% of all their scams had a nexus to UK accounts. And for Australia, we've also got these rise of the scam compounds in our backyard through Southeast Asia and the Golden Triangle, even reports popping up in Mexico and the Middle East where drug cartels are pivoting to those networks and then moving to other scam types and other rails such as cards with the lower volume but higher value, higher volume but lower value credit card fraud and phishing, but also then industrializing to exploiting real-time payments to get their money across. So we need to consider those issues, but to Gary's point, we also need to consider what's down the road. Now we have this G20 roadmap where they want to connect and turn on real-time international payments, but have we learned from those lessons domestically as we're going down that road? And you think of the issues they talk about transparency, they talk about cost, they talk about access, and they talk about speed. But is there that discussion around safety by design? And I think that's a really big question we need to ask ourselves.
I think it's a really, really good point, Toby. And I remember when I interviewed you for the paper, and you kind of threw that stat at me about 45% of kind of scams, the money kind of coming over from Australia to the UK, and it kind of dispelled. It shocked me a little bit, but it didn't at the same time, because we kind of sit comfortable in some of the existing statistics when there's a lack of data. We hold on to the bits and bobs of data that we can find, and I think that can create not necessarily complacency, but it can create a perception that maybe this isn't as big an issue as it is, because there isn't that latest stat that is driving that latest bit of work around it. And some of the issues we brought up in the white paper around kind of lack of standardization across different jurisdictions is even just in how APP fraud and cross-border payments is talked about. So how would you draw those statistics from each of the countries to even be able to give us that insight? So it is a real dark figure of crime. We simply don't know. But because we don't know, we should be kind of more fearful, more complacent, because just because there isn't a big number to push behind it, we should almost be kind of thinking that's a bigger problem because we really don't know. So kind of I think it shows the importance of hearing all the different perspectives and collating the data that we do have from different jurisdictions to understand, where the problems are being seen. Ultimately, because 45% of those payments are coming to the UK doesn't mean that the fraudsters reside in the UK. I mean, they might, but they could be anywhere globally, right? But what it does mean is that the UK is a good option for those scammers to go to next in that cross-border payment. So we need to kind of really have some good analysis of what's actually going on to enable to get to that answer, that I guess that overall question of how big this problem is my estimation from speaking to everyone in the industry is simply we don't know, but like we can't underestimate it, I think, and I think kind of the guidance that you guys have given us then kind of reflects that really. I'd be really interested to ask you guys to think about kind of not only kind of are we concerned enough, because I think the contributors when we started doing this research, their determination to be involved and to talk to us and the enthusiasm that we had over it from the working groups and broader is that it is a key issue and that there is a lot of concern around it. So if we agree on that, hopefully. What are the challenges in tackling it then, you know, for financial institutions, for governments, for global systems? You know, obviously we talk about this in the paper, but I'd love to hear from you guys first to think, you know, what are the key challenges that you're seeing in actually tackling this issue in the first instance?
I can lead in on that one. To go off your previous point, the question I have is we quote these colossal figures all around the world, and we have these headline figures that tend to vary, but where is that money going? And if this was, say, in the early 2000s, and we're looking at, you know, global terrorism issues, there would have been all this analysis to find out where those proceeds of crime are flowing. You look at the war on drugs, there was all this analysis about where the proceeds of crime are going. And we're calling this a national emergency around the world. But I'm still yet to see the analysis, not only from domestic jurisdictions, but from the global level about where those proceeds of crime are going so we can see it. So I think all we can really do is learn off what we've been dealing with domestically, where we've been playing catch up with safety by design. So what are we doing? Going to be playing catch up. We've been looking at what is appropriate risk-based friction. Well, the payments may go under those real-time rails, but before that's authorized, we're holding those things back. And we're doing a variety of measures and we're innovating as we go. In a way, we're building the plane as it flies and we're sharing that best practice internationally. And we're also noting the complexity of the payments value chain, but the different size and scale of businesses. So the first one about, you know, rebuilding trust was knowing, well, who are we paying? So we built confirmation of pay solutions, which is also useful for mistaken payments. But then once the money goes, the ability to trace and repatriate those funds is a challenge for us. And is that what consumers expect? Are they going to have trust in our digital economy if we can't easily trace and repatriate funds? So now we've been working at that domestically. So that's something we're going to have to think about internationally. Think about connecting confirmation of pay systems, but also we talk about domestically how we're having in and outbound fraud monitoring. Are we going to be able to do that with international payments? Are we going to be able to have fraud risk scores being transferred? Are we going to be looking at having network analysis where we know where these broader money laundering networks are? So rather than putting in these SARs, or we call them in Australia SMRs, to our financial regulator, which are a huge compliance burden, a very small percentage of them are actually looked at. There's some statistics saying less than 1%, and then less than that are actually referred to law enforcement. So how are we going to take down these money laundering networks, and how are we going to know who we're transferring money to? But the other great challenge when we look at this is the other side of friction, that we know out of the damage those fraudulent payments or also money laundering is causing, it's only a fraction of 1% that are actually fraud, scam, or money laundering related. Less than 1%, but we know for some of our banks, it's up to 40% of our complaints. So we have to have that balance right, because we can't be turning off the economy and turning off supply chain, but we need to have those protections in place. So I think there's a variety of things that we need to be considering as we're going down on this journey. And we just need to learn from our lessons that we've had domestically and look at that internationally. And of course, what I can also see is there is going to need to be some look at defining what is more and what are minimum standards and what do we need to do. And then by setting those standards globally, we can have domestic countries resolve through their legislative or regulatory issues such as privacy, so we can work together safely and we can work together cooperatively as well.
Toby, let me build on to that with 2 points. One is we are a company that believes that safety and speed are not mutually exclusive if you have the right software. And that's been what's missing on a global basis for cross-border payments generally, but also for APP fraud within real-time cross-border systems. But I don't want to go there with my comment. I want to follow up on your comment, talking about where the money is going and really what bad thing is happening as a result of the money getting there. But let's turn the coin over and say, where's the money coming from and who's feeling the pain of that payment? Was it a consumer who did not have their funds reimbursed by their financial institution? Or was it the financial institution who stood in to reimburse the customer? So someone is feeling pain on the other side of that coin. And I think that we have to take this holistic view that we have to solve the pain either for the consumer or for the bank who's standing in, or the EMI or the payment entity that's standing in to make them whole. But we also got to make sure the bad stuff, the bandits that are exploiting the system, we understand what they're doing and how they're doing it. So together we can bring a solution that works to solve both sides of the coin. The challenge is when you look at cross-border payments today, according to the United Nations, up to 5% of the global GDP is money laundered through banks. So that's $2 trillion a year. My comment and my excitement and reason for wanting to have this call and have this white paper done is we can't allow APP fraud to approach anything like that. There's a debate. Could it be more? Could it be worse? Will it be bigger? Will it be, how's it going to be affected? My concern is that think about how slow cross-border payments already are through correspondent banks. We can't make them any slower. We can't add any more regulations. We can't add any more people, and we're not solving the problem with the 5% of the global GDP laundered through banks. The only way is through technology. And so when it comes to APP fraud, I would say it's the same thing. We're going to have to take a technology approach and figure out how do we understand on the originating side, what are all the actions and events and messaging and circumstances that are causing people to fall victim to that fraud? And then where are the points through that transaction where technology or someone or something should have recognized there's a bad act happening here and we need to prevent it? Because when you think about the speed of that payment versus a classic cross-border payment and the fact you can never get it back, if we don't get this sorted out, it can be a big painful problem for on the guys and the people that are standing in to either take care of the customer or the banks or the EMIs that are suffering the pain of that illegal payment.
I'd like to build on something that Toby said actually about learning the lessons from domestic fraud and how we've tackled that, fraud and money laundering and how we've tackled that. I think one of the kind of big trends in that space has been intelligence sharing, right, between all the necessary actors in the space. And I think actually to Elena's question in the Q&A there, I think one of the biggest challenges here is trying to figure out how to do intelligence sharing across these jurisdictional borders, because it's nowhere near as straightforward as doing that domestically. We're bumping into banking secrecy laws, we're bumping into tipping off regulations that are all sort of there domestically, but internationally suddenly come to the fore and really get in the way for sharing intelligence between FIs or between third parties to help share intelligence between those FIs. And so for me, that's kind of one of the biggest hurdles. And as soon as we figure that out, either by collaboration or through, to Gary's point, the application of technology, especially some of the new privacy enhancing technology that's coming to fruition, that we get over this kind of main hurdle, and then all of the other issues I think will start to fall like dominoes. But for me, this is the key. How do we collaborate between jurisdictions to be able to share the necessary intelligence to learn those domestic lessons that we've learned over the last 5 or 6 years?
I think it's a really good point, Michael, and I think there's a lot to learn from different places, different jurisdictions, and different times. And when we talk about, there was a lot of discussion around collaboration within the paper and the call for that. And there was different perspectives on how it should be done, whether it be the information that's sent with the payment or prepayment, and that right down to the granular to kind of top overarching thinking around how even the names that we call things, the kind of approaches that we all agree on, and some of them are possible, some of them maybe not so much, so we can't we have to learn lessons from the past, but we also have to think about what's practical and and possible and doable, and create a roadmap, and trying to get people to agree to that is something that seems to be a challenge in itself. Just to call on some of the questions for you guys that we've had since. Sat has said, do we have an internal draft policy that firms can use in implementing solutions against APP fraud? Something that would be a massive help. And I guess that comes back to thinking about the good practices or best practices. I tend to never use best practices because there's always room for improvement, but being able to share those ideas. Has anyone got kind of anything to add to that? And I'll move on to another question. No.
Nicole, I was going to dive into Dan's question about public. Yeah, I was going to dive into Dan's question about public market infrastructure. For putting aside the label for a second, Dan, your question is spot on. There needs to be software infrastructure that interconnects these systems that can be deployed by parties on either side of the transaction to help identify and prevent these sort. We totally agree. And that's what we built. But we're not describing it sort of as public market infrastructure using that specific nomenclature, because getting governments around the world to invest in some sort of shared infrastructure, we think while it's a great theory, in practice it hasn't really panned out that much. But we do think the central thesis that an infrastructure provider that interconnects systems, that's got a lot of capabilities around it to deal with some of these issues, is the key. It's a big part of it. The other thing I would say is that one of the theses I've tried to put forward is that the financial institution, whether it's an EMI, a PI, a bank, a credit union, whatever it is, that's responsible for opening the account of the fraudster, that is the one that's perpetrating the fraud. As we look at sort of risk sharing or loss sharing, again, getting these things coordinated globally through governments and regulators is really, really difficult. But I think the industry can work together and should come up with a thesis, sort of a headline, that if you're the institution whose KYC or fraud deterrent or whatever tools you've deployed to open an account failed to identify this was a criminal or a fraudulent entity opening that account, and then they perpetrated fraud around the world, a lot of the risk shifting responsibilities should fall on that root cause of that institution that enabled that. And that's just it's an argument I have. It's a debate. It's a view that I have. It's only my view. It's not fair that for me, if I'm the financial institution whose customer was defrauded, and I did everything I could to prevent that fraud, and the customer acted in good faith, but the initiator of the fraud was from a financial institution, again, doesn't matter the label behind the institution, that an account was fraudulently opened and they accessed this payment systems in their country and then connected globally, and they committed a fraud, bigger responsibility should go there. And I think when we're tackling this issue, taking these use cases and taking these examples and deconstructing them and really finding out where this is happening and how this is happening, it will be very informative first step in trying to get to the root causes of why these things are happening. How are we letting criminals into our regulated financial institutions to perpetuate these frauds? We got to start with how is that happening, and what can we do differently to prevent these foxes from getting into the chicken house, and then we've got a better chance of minimizing fraud throughout the system.
I think that comes nice. Right. Sorry.
Yeah.
I'm just going to highlight Toby. Go on. Sorry.
I think the carrier pigeons between the UK and Australia are just a bit slow on that, cutting across the top of each other. I was just going to add into Gary's point. He makes a good one that I say, if we look at fraud is about prevention, and And the best chance we have of the prevention is where the criminals first contact their victim. And we get to talk about the role of digital platforms in the telecommunications industry. Once you go down that road with the social engineering, and we will put in all the attempts we possibly can to detect those at-risk payments, put in those appropriate risk-based frictions that take into account those considerations and attempt to identify and stop, that becomes an increasingly difficult exercise. But we know amount of volume that still occur. And Gary's point is very true that this is also a money laundering problem. And it's due to the amount of mule accounts. Now, some of this issue thinking it is the fraudster's account. A lot of the time, it's not. It's a money mules account. And sometimes those mules aren't necessarily willing mules, they're unwilling mules. And we're seeing the scamming methodology going to the money laundering space, where they're recruiting a series of sophisticated mule networks. And these are job scams or employment scams. These are romance scam victims that are elderly. But also what we're seeing that as we're closing those down and using, say, biometric technologies and using AI and machine learning to detect those at-risk payments, we're now seeing a greater pivot. We're seeing a pivot to credential on-selling and looking at those issues. And again, these are issues from the digital economy, where historically someone would go into a bank branch or a bank office, show their ID against their face, and open up an account, then have to go in and show their ID to make a transaction. But in this rapid world of easing on the digital economy with rapid onboarding, criminals are now exploiting that. So we're constantly having to respond and share those best practices, where we're saying, well, how are we mitigating credential on-selling, about confirming with advanced KYC and enhanced customer due diligence who is actually operating that account today, and having those systems in place so we can go through those massive pay volumes to identify that and close it down. And it's this rapid muling that's happening, which is making the funds tracing and repatriating really difficult, because they move very rapidly domestically, then move out, as we know, internationally or other off ramps. And that's a colossal challenge that we're all responding to. And the earlier question is there any best practice guide? Well, this is moving so quickly. And I guess in Australia, that's what we're considering now with our scam prevention framework, where you'll see consumer groups and you see advocates saying, oh, we want banks to do more. But very rarely do I hear them say what more is. And so as we're looking to those minimum obligations, we need to work together as an industry and also globally to define what more is and define what best practice is and what is effective, whilst also managing the unintended consequences, which is critical for our industry when it's so critical for supply chain. Thanks.
I think that really nicely comes into what I was going to say anyway, Toby, which is just to raise Laura's questions around how central is quality engineering to your approach in tackling challenges such as this. As fraud becomes increasingly sophisticated, how important is it for financial institutions to adopt a quality first mindset and ensure resilience and enhance fraud detection efficacy? Could an emphasis on quality and system development and technology help us organizations stay ahead of fraudsters while maintaining customer trust? Because that's the balance, right? And I think that a lot of what you're talking about with this kind of safety first approach, I call it fraud prevention by design, within we're seeing. And even what you've just said, Toby, about the relationship between APP fraud and money mules, for example. One of the challenges of this paper was thinking about how do different jurisdictions talk to each other. We have those silos within our financial institutions. We have the AML team, and we have the KYC team, and we have the fraud team. And sometimes those things don't ever meet to talk to each other within the financial institution, never mind beyond, and across borders. So I think the kind of focus and bringing people together is a huge issue. But it's not simply a cross-border one, it's a domestic one as well. And so some of the lessons, it's not only the lessons that we need to recognise from that we can take domestically across border, but also the challenges that are still being faced domestically. Should we be expecting the cross-border space to deal with those challenges when we can't even figure them out domestically? So I guess that's maybe a little bugbear, but it feeds exactly to what you were saying, Toby. But Before I kind of move on to more questions, is there anything Michael, Gary, or Toby would like to add at this point? And if not, we can maybe have a look at some of these other questions.
I'd just like to add on the engineering front. I think one of the things that Toby mentioned is the speed at which these attacks are evolving. And in fact, Gary mentioned it right at the start, right? The speed at which the payment systems themselves are evolving is picking up pace. What we've been able to see on the real-time payment networks is this kind of infection of serious and organized crime into especially real-time payment networks, because they do offer essentially a bunch of ways of committing fraud and executing money laundering that is relatively novel. And so our ability to engineer feedback loops where we're able to build adaptive systems that are able to learn new forms of attack, that are able to spot these relationships between new types of fraud and new techniques for money laundering. I think it's a substantial engineering challenge, and so I think it was a good question asked there, in the sense that there is a fundamental engineering challenge where we have to tighten up our feedback loops to be able to take necessary action against this behavior. And I think for cross-border, it's quite exciting, if I'm honest, because it's a relatively greenfield space. There's not a great deal out there that's been set up to tackle fraud and money laundering, as far as we can see. Some interesting work from Swift, but more broadly, I think there's an opportunity to actually do some really exciting engineering and kind of get up the nose of serious and organized crime.
That does lead me quite nicely, Michael. Thank you for setting that up into thinking about what are the opportunities in this space then, because I think, you know, when we have these conversations, it's very easy to dwell on the challenges and almost get to a point to think, well, is it even worth spending the energy if there's so many challenges and so many barriers to kind of achieving movement in this space? So I think sometimes the discussion around opportunities gets lost. So I'd really like to hear from you guys to see where you think the opportunities lie in trying to tackle this. You know, what do you think could be that kind of exciting moment to kind of either pull pieces together, or new technology, or whatever it may be.
I'm happy to keep going on that. So I reckon domestically, the case for building collaborative networks to fight financial crime has been made now, right? So the work in Australia, the work in Singapore, the work in the UK, there's lots of really good, successful examples of collaborative approaches to tackling financial crime. And so I think that we don't have to make that case as aggressively as we did 5 years ago to start doing that interjurisdictionally. So for me, that's really exciting. That was a slog, right, for a few years to try and make that case and then demonstrate its value. And I think now that that's been made, hopefully it's going to be an easier, maybe an easier time as we go between jurisdictions. And I've mentioned this previously, but I think some of the new techniques around encryption, around things like federated machine learning, there's a whole host of kind of private by design technologies that are perfect for cross-border intelligence sharing, perfect for fighting cross-border crime. And I think there's a real opportunity for us to dig into these technologies to build some really interesting solutions. So I'm quite excited. I'm feeling quite optimistic about the whole thing.
And I just want to jump in, and I don't want to and I'm kind of respond in general to a couple of the questions regarding a more focus on risk recovery, more focus on alignment of rules around the world. And folks, listen, I'm I'm a pragmatic person, and I don't try to be disagreeable or debatable, and I'm not intending to be with this next statement. But for years, I've been hearing from the industry, from banks, biggest banks on the planet to the smallest banks, the EMIs and PIs, in the context of cross-border, saying, shouldn't we just get governments to get on the same page regarding compliance and risk and data sharing and KYC and listen, we can't get governments to agree on how to spell KYC. You're not, and we've seen more divergence now than ever. And I just think as industry, we can't look to government to sort out these problems. And I was on a panel last month in the UK, and the panel was talking about the need to get the world governments to sing Kumbaya and agree on these things. And I said, I think it's unrealistic. It's not going to happen. And I explained that how laws are passed, and whether it's in a parliament or a Congress or a king, it just doesn't work that way. And there are other self-interests and priorities that prevent this sort of global alignment. And when I left the stage, an older gentleman grabbed me by the arm from the ECB, and I had never met, pulled me down and said, finally, someone's speaking the truth. We're never going to be on the same page. So I don't want to be a bearer of bad news. I want to be the bearer of honest news, that we can't depend on law enforcement in these countries where there are bandits exploiting the system to come to the rescue. As much as it's a great idea, and I wish they would, they're overwhelmed, and there are other priorities and there are other things. I think it falls all back on the industry to do as much as we can with great technology, great best practices, great coordination, great data sharing to elevate our game when it comes to preventing, mitigating, and fighting this problem. I would say the one thing that we should think about, and I argued this, Doctor, in the opening to your paper, which is the extent to which a bandit or there's an investigation that's being undertaken. Banks and EMIs and PIs should be clear with all of their customers. This is my opinion again, that if you are suspected of participating in an unlawful activity, you waive your right to privacy. We're gonna give your data to an investigative body, and don't stand behind them, because some countries have incredibly strict privacy laws, and I get it. I mean, I'm a big advocate of privacy, but I'm not an advocate of privacy being used as a shield to prevent bad guys from doing bad things. And this is the one area of collaboration or internal discussion with regulators and lawmakers and banks that we should be having, that if a customer has been exploited to open a mule account, or if a criminal has opened an account, there ought to be acknowledgement that we're going to share that data with the industry so we can make sure that we use that information to prevent more bad stuff from happening. But I think the rest of it's going to fall on our shoulders to figure this out, to work together, to collaborate, and to be as engaged as we can. This is one of those problems that if we fix it, we all are going to do better. If we don't fix it, we're all going to suffer. It's not a win-loss between us. It's a win-loss between the good guys and the bad guys.
Yeah, it's a really, really good point, Gary. And I agree with you, because it's a global problem that requires a global solution. But we, as our industry in payments, need to make our system safe, not only domestically, but as we work globally and in a connected world, we need to meet in an efficient and effective manner to create that secure by design. We know what the issues are. We know what the vulnerabilities are. We know how to resolve and implement those solutions. And we can do that very effectively if we are coordinated globally. We want our payments to connect globally. Well, we should be coordinating globally so we have trust, and consumers want to use our products, business want to use our products, and we don't take all those efficiencies and gains away, as I mentioned earlier. And then from those insights, we have a lot of power. We need to influence government to do what they can do, and everyone will do their part across the digital economy. And for governments, there's this growing issue of these scam compounds, and we thought we had a problem now. What we have now is a drop in the bucket for what is potentially coming with industrialization of these scam centers that are becoming so profitable. You have drug trafficking networks pivoting to these, leveraging off the back of economic zones throughout the world, and now so profitable, relying on human trafficking to fuel many of these centers. But what's interesting, that many of these centers that are making money, and despite the human trafficking element, a lot of these are victims themselves, as I said, from the human trafficking. But we also need to look at, well, how are we going to solve these centers, because they are in those developing countries, and that's not something we can do as an industry. That's something that needs to be escalated to those high levels of government where they have their coordination. So everyone has their part, but we have our part, as Gary really eloquently put, to resolve these challenges with safety by design with our systems.
Absolutely. I think, I think you're both spot on, to be honest, given obviously my background is I'm a criminologist. So when you're talking about kind of organized crime groups and the globalization, globalized nature of it, the relationship between cross-border payments, not just on APP fraud, which very much makes me think, okay, the fraud that happens, so therefore the impact on the victim and where the money's come from, but where that then goes to, why do we want to get money across border? One of the conversations I had in the process of this was thinking about, well, you go out cross-border just to get it out easier in a different jurisdiction. And I was, as a criminologist, I'm thinking that's not always the case. You're moving things across border because you're paying for goods and services in other jurisdictions, such as human trafficking, such as, terrorist financing, different things. So when you think about like what's at stake, it's not purely a financial one, and it's not just the impact on the victim when they've been scammed and how that's then reimbursed. It's the impact on all of us, the cost that it puts on the financial system that we ultimately all go and pay, because someone's to foot the bill, right? And the financial institutions are the ones who are doing the reimbursement. Then that ultimately will be felt by everyone along the line with different rates and things like that. But right up to where this can go in terms of terrorist financing and serious social harms that this goes on to perpetrate. So we all have a stake in being the gatekeepers. And like you said, it's not simply about us being expected to solve all the problems, to play our role in it. One of the key things that it just comes to my mind all the time in running a business, but also being in this space, is that fraud prevention is a competitive advantage. We all talk about data sharing as being potentially being a competitive disadvantage because you're giving your secrets away, but actually protecting your customers in the first instance, just cutting it before it even starts, is such a competitive advantage, not only because your customers remain safe, trust grows, they therefore engage with you more, but also because you're not then facing the penalties when it falls down, when fraud does happen. You're not having to face the reimbursement because it simply didn't happen on your watch. So it's a very simplistic kind of way of looking at things, but from my position as an academic researcher who is to look at it from that kind of top-down level, and when you see all those parts come together, it makes the urgency of this even more apparent when we kind of break down those silos and see exactly how interconnected it is. So it kind of really brings it home. I know that's something you look at, Michael. We kind of had a bit of a brief discussion about that yesterday. I don't know if it's something you want to chime in and think about in terms of how interconnected this all is.
Well, yeah, so we see the money laundering networks on Faster Payments in the UK, the UK's real-time payment network, and it's obvious that it's an economy, right? Like people are stealing money, moving that around the Faster Payments network, so moving it around the UK banking network, and it's not just sort of traditional money laundering, sort of layering and extraction type behaviors. It's highly complex. It's kind of obviously paying for other goods and services away from the predicate frauds, and it looks like an economy hiding inside of the wider economy. And so when we start to think about how cross-border payments are connecting these hidden economies inside of different countries' real-time payment networks, it really kind of makes it clear how this isn't just we need to stop fraud, or we need to do KYB, or we need to trace money laundering. This whole thing is a coherent set of activities that is kind of hidden and embedded in the national economies that we're working with. And so, yeah, I totally agree that it's behavior that is more than just how do you extract some stolen funds from the network. but I also agree with some of the other points made today in the sense that these aren't distinct behaviors. And so having distinct teams within banks or distinct products looking at just a little part of the puzzle, I don't think that's going to make the necessary dents that we want to make in this behavior. I think we are going to need to come together in one way or another. And I think that's actually the key for me, that I haven't heard anything that's particularly compelling yet in the discourse about how we come together, about how we all play our part. The closest thing that I've seen is in the UK, in the confirmation of pay work that the PSR did in the UK. And Toby, you might be able to, you mentioned it slightly for what's going on in Australia as well. But the PSR created a protocol for us to engage with on the confirmation of pay. And so they didn't say everyone must use the government confirmation of pay service, or everyone's going to use or implement it themselves, or everyone's going to use MasterCard service. What they did was describe a protocol that everyone engaged with its design, and that allowed players all around the ecosystem to have a kind of proper market approach to satisfying the requirements of the service either side of this protocol. So we came together to talk about a protocol for confirmation of pay, and then kind of went away again to get back on with competing in the space of providing those services. And that was kind of the first little glimmer that at least I've seen in my experience about how we might come together and collaborate in this space without it all just being sort of stamped out by some sort of government body, or to Gary's point, sort of owned somehow by industry. The idea that we can define the interfaces between us and collaborate there seems to make some sense to me personally, not speaking as MasterCard for a second, but I'd love to see more of that. And I'm not quite sure how it gets, how that kind of work can begin, especially between jurisdictions, but I'm very keen to try and figure it out.
Well, just being responsive to some of the questions, there are 3 questions about data protection laws already having carve-outs or spectrum. So the answer is, in some countries, it's yes, but it's messy and it's inconsistent, and the willingness of financial institutions to participate are also inconsistent. But it's something that, from a best practices perspective or an objective perspective, my argument was simply that we ought to be moving in that direction, where we have greater awareness among the ecosystem as well as with regulators, that we feel strongly as an industry that if you've got someone on your books that appears to be behaving improperly, that, you know, let that customer know, even though they're shielded by strict laws, that we're gonna give up your data if we're gonna investigate and give up the data. That's all I was trying to say. I don't think there's a big universal sort of answer to that. The other thing about social media platforms, this is a big area. We haven't spent much time talking about it. We don't have a lot of time left, but the social media platforms are a part of this for sure, and they can help or they can exacerbate the problem. And so this might be an area where industry should have a bigger voice, bigger engagement with these folks to make them aware of this problem. The extent to which we can hold them accountable is challenging, but it's something that is worthy of discussion. The other thing is crypto, and that's what I was trying to say in the beginning, is that the crypto transactions are so far removed from what most of us are doing this in this room. If someone's doing a crypto to crypto payment, they were exploited as a part of making that payment. It's hard to reconcile that. It's hard to have at this point in the global sort of economy and the positioning of crypto for us to do that. I'm saying let's keep these payments inside the banking system, where we can monitor, control, and protect consumers. And that's my leading message here. We want to protect consumers from bad things, protect our customers of financial institutions, EMIs, and PIs from the bad actors. And we can do that much better if they're here than if they're on some crypto platform. But it does require that the industry and everybody work together, as we've all been saying for the last 50 minutes, to help make that happen.
think that's probably a bit of a difference between the Australia and the UK approach, where we've been watching the UK with their sandbox of how they tackle APP fraud. And from those lessons, we've seen what the unintended consequences are. We've seen what works and what hasn't worked. And so now we're going down this model of the scam prevention framework, which was just introduced to Parliament on the 7th of November, which makes sure all the digital economy are designated sectors and they do their part. And that's why we've been seeing these big reductions in Australia. And also to support that, and to Michael's point about bringing people together, we work in a very regulated industry. And we also work in regulated, we have breaches with money laundering that we face mass sanctions. So there's a lot of risk aversion and compliance in that. And sometimes we need to know where the lanes are and where we feel safe to operate. And we also can collaborate. And one of the great advantages in Australia was the formation of our National Anti-Scam Centre, which is government-led, which allowed us to sit down and work through these issues. So Australia, some of our major banks are seeing 50+% reductions year on year in scam losses. And if we look at our industry data with all the financial institutions together, we're sitting at the moment about 35%. And why is that? It's because we've been able to sit together and collaborate and work through these issues, but also work with other sectors such as the digital currency exchanges, with where it can be that appropriate friction. And for some who aren't cooperating, blocking. But for those that are, like, supporting them and also working with them for funds tracing, repatriation, making sure they're up to our standards with KYC and onboarding and so forth. And we have those pathways where we can dialogue, but also then working with the telecommunications industry so we can harden our systems. And that's even for, in-app verification. So if you got a problem with a payment that you've held, and there was a question about payment holds, one of the challenges is the customer actually answering the phone so you can talk to them, because people don't answer their phone anymore. So working with those telecommunications providers so we can have that in-app caller verification so they actually pick up the phone, but then trust who they're speaking to. And this is one of the issues with bank impersonation scams. So, and moving one-time PINs, even with cards and strong customer authentication, off the telecommunications network. Now, whilst we're working with them and sharing insights, and we actually are sharing data with them, we've developed an open intelligence loop. They're doing all the blocking that they can, and excuse me, it's happening around the world with, I might just pause there, sorry.
Don't worry, Toby, definitely get a drink.
Oh, it's 3 in the morning. It does it to you. But then, we talk about the digital platforms, and this is what's important with the government's legislation, that when we look at the UK, what we've learned is regulating one part of the scam lifecycle does not effectively mitigate scams. And so that's what we've learned. And so that's why we're looking at this cross-sectorial model, which includes those digital platforms, and everyone has to fit those minimum obligations and shared liability. I might just pause there. Thanks, Nicola.
No problem, Toby. Thank you. I mean, it brought me that what you're saying there. It's one of the reasons why I was so excited to see that you were coming on to hear Toby to talk about it, was because it is a different approach. And as you explained to me and have done now, watching the UK and learning the lessons. And sometimes, we like to think the lessons that we're putting out there into the world, the ones that people will take on and copy us, not kind of shy away from because we haven't necessarily hit it so well. But and to make kind of Michael's point around, the about the comparing payee and kind of creating that, the protocol. Where within the white paper there was a lot of discussion around the creation of standards, and I think that's what they were talking about, Michael, was this: how do we create protocols, not where it's do as I say, we've decided this is the best option, but actually where there's a collaboration of what could work best so that the market can respond, but actually that there's more guidance, and potentially that, I guess, the opportunity for the regulators. We are very highly regulated, as you said, but we need to be able to use that regulation in a way that has positive impact. I'm really, really sorry we've run out of time. Thank you so much for your questions, and thank you so much to Gary, Michael, and to Toby for taking the time, particularly in the middle of the night, Toby. Your insights, as always, have been really, really eye-opening, and you can read more of them in the white paper. Thank you so much, and I'll hand back to Katie, the Payments Association. But thank you so much.
Thank you, Nicola, and thank you to all of our speakers. That was a really insightful session, and I think you can tell by how many questions keep rolling in. If you do have any questions for us, please contact christina.gatons@thepaymentsassociation.org. We will shortly be sending a survey around. We really appreciate it if you complete this, because all feedback is really helpful, and that's how we improve. You'll also receive a follow-up email in the next 24 to 48 hours with a link to the recording of the webinar. You can share this with your colleagues, anyone that missed the live version today. But on behalf of the Payments Association and our speakers, thank you so much for joining us today, and have a great rest of your afternoon. Thanks very much, guys.